Today, we are going to talk about what are candlesticks, but much more than just simple candlesticks. There's always going to be more to every lesson than what I have portrayed. Now, my delivery man, my handy delivery man. Thank you, sir. Appreciate you. Okay, got you. You'll sit in for a minute, bro. You be my special guest. All right, welcome, PC member John. Let's go. He's a PC team manager, and he is going to be a full-time trader here in a few days. So he's hyped for PCP 2.0. So let's get into it, ladies and gentlemen. So first of all, what are candlesticks? Okay, moving on. So first, again, everyone in here, I believe, knows how to read a candlestick. If they don't, we will go over it right now. There's basically two styles of candlestick. There's a green one, which is good generally if you're buying the upside, and there's a bad one, generally is bad if you're buying the upside. Now, the green one means that there was, just simply put, more buyers in the given time frame of the candle. A candle can be 1 minute, 5 minutes, it can be a year, it can be whatever time frame you want it to be, and we're going to get into that. Now, how this happens is the bottom of a green candle is where the stock price opens. Now, for example, it's 9:30, market opens, and we're trading the 5-minute time frame. So every 5-minute interval is a new 5-minute candle. So on the nose, 9:30, 9:35, 9:40, 9:45, they're all going to be different 5-minute candles. Just like if we're trading the 1-hour chart, 9 a.m., 10 a.m., 11 a.m., they're all going to be different candles. So right where the bottom of a green candle is where the stock price starts. Now, all a candlestick does is it shows us data. It's simply just data of what happened given that time frame. Now, you can also go down into smaller and more minute time frames, which we'll talk about today, that will also show you more in-depth data. Okay, so if we're watching the 10-second chart, every 10 seconds is a new candle, you're going to know more data of stock price and stock price action compared to the 1-year chart. Okay, so moving on, stock opens. This is called the body of the candle. Okay, this thick part. So you open at the low, and the close is the high of the body. Okay, so some people don't even look at the wicks, which is stupid, but some people just don't have wicks on their chart, which I don't know why you would or wouldn't. Wicks are very important. They tell you a lot of data because within that time frame, it also shows you the absolute lowest that candle got and the absolute highest. Okay, so moving on to the bearish candlestick, it is the exact opposite. Okay, so what happens here? The stock price opens, and at one point, this candlestick was actually green because if the stock price is above the opening price, this is the opening price. The stock price is now here. This candle was actually green, and then it went break even, and then it went down below open, and it turned red. Okay, so for a live example here, let's just I'm exposing PCP 2.0. So right now, for example, if we're looking at the 1 minute time frame on this, this is the 1 minute time frame. Every single candle represents 1 minute. Right here, this is a red candle. Okay, if it's break even, it'll be gray, which we'll talk about. And if that candle gets above the opening price, it will become green. Okay, so at one point, this candle was actually green. Will it turn green here? Let me look at another stock so I can show you guys a live example of a green candle turning red. So there's a new candle here because it's a brand new minute. It is 10:15. If that stock price gets above the open price right here, which it looks like it won't, then it'll turn green. Everything's red right now. And as you can see, the body, as it's continuing lower, it's creating a new wick. So that was the ultimate low of this candle. However, if it were to close right now, that's where the next candle would start. Okay, so every time this body pushes lower, it pushes that wick out. Okay, so if we see the stock bounce, what we're going to see is this 5-minute candle turn, or this 1 minute candle turn green, and this was the absolute low, while this is the absolute high. Okay, I think you guys get the point of reading a candlestick. That's a very basic entry. See, so where the body of this candle was, that's where it closed, and then now it has a new open price. And if it continues higher, it'll turn green. But if it gets below the open price right here, it'll turn red. Okay, we all know how to read a candlestick. Cool. There's a few examples here. Okay, so John, I have my assistant John here. It's perfect. John, can you tell me the open, close, the high and low on all these candles right now? And I'm gonna put you on the spot.
Yeah, open, close.
Yep. Where's the high and low on this candle?
Uh, lows here, highs
Okay,
there.
that was a trick question. Good job.
Um, open there, close there, low there, high there.
Perfect.
Um, open there, close there, high, low.
Perfect.
Open there, close there. Went all the way up there,
And then closed right there, and the
right down
low
there.
is the bottom. Okay, you got it. Now this one. This is a tricky one.
It's a doji.
Yep.
It lots of indecision, just
Yep.
kind of opened and closed in the same spot. Didn't move too much.
Perfect. That's exactly what I was looking for. Open and close in the exact same spot. If it opens and closes at the same price, guys, it's considered what John called a doji. And sometimes in standard is a gray candle. Okay. So now we are going to go on to advanced concept. J Money coming out. So we have advanced concept here. We need to have a little music behind it. So J Money is talking about advanced concepts here. So today, common chart patterns. You can pair your candlesticks and previous candlesticks to identify a setup. Now, you do not want your competitive edge, which what we talked about yesterday, to simply be just a candlestick pattern. There's a lot more that goes into it. If you are just trading candlesticks, no volume, no level 2, and you're just trying to trade candlesticks, you are going to lose 10 out of 10 times, I can promise you. There is no one in the entire world that just trades momentum stocks off of candles and makes money, period. There's so much more to it. Okay, so in this example, we have what's called a bullish engulfing candle. Okay, what that means is this was the red candle previously. Now, if the next candle continues higher, much past the absolute high of the previous red candle, this is engulfing the entire move of this previous candle. That's a bullish sentiment. Now, it also depends on where the candle closes. What happens here is depending on where this candle closes, it will create bullish or bearish sentiment. For example, a candle, this a lot of people don't understand this. A candle can be green and it can still show bearish sentiment. For example, if this candle right here looked like this, that would be bearish sentiment, which means it took the high but then closed down here, which shows sellers are in control at this level. So it very much depends on depends on where the 5-minute candle or any candle closes. For example, if we get this candle, then somehow it rallies back up to this level, I wouldn't be trading it. I want to see strength. And how I think of this is, anyone play any sports games? 2K? Any 2K players in here? Okay. If you're really lame, you played NBA Live like I did in the GameCube. NBA Live 2005. But if you guys played any sports video game, a golf video game, football might have it, any game with a shot meter, what do you know if it goes all the way, if you perfectly time it all the way to the end? What's that called? Like a full
Green bean.
green bean. Okay, that's a green beaner. So what happens is that's gonna be perfect. Okay, it's a perfect shot. It's gonna go in. Is it 100%? Has a green bean ever not made it? Okay, so if it's green bean, it's in. And if this stock is a green bean, which means the body of the candle is closing practically at the high, that's what you want to see. Okay, you should expect that buyers are in complete control, and when the next candle opens, it should continue much higher. Now, we'll look at this example, and my whatever it's called is kind of blocking it here. Okay, here we go. So this example, because this 5-minute candle turned red, however, buyers were in complete control, and it did continue much higher, and I was able to sell. If you look at the 1-minute time frame, you will be able to identify that this continued much higher. And in fact, I'm going to show you guys this because this setup was from yesterday. So, and this is exactly what I mean by more minute time frames give me more data. Because if I looked at just the 5-minute here, I will think, oh, that's kind of bearish sentiment. That should continue lower. Or if I was just shorting the 5-minute, I might have been still holding in this point. However, if we look at the 1-minute here, you can see that it indeed did continue much higher. So it closed right here, the 5-minute candle, and the next 1-minute candle started, and it went all the way up to 588, and we sold at 575. It gave us an opportunity to sell. At one point, this was a green candle. Okay, makes sense. So what we see here is that the more green beaner it is, the closer it closes to the high of that candle, the more bullish. The negative approach, if the red candle closes very low to its all-time low, so say this 5-minute candle closed way down here, the odds of it continuing lower are more likely because it shows that sellers are in complete control. Okay. Now, I'm not going to waste time about a hammer and inverted hammer and stuff like that. Perfect. Okay, so continuing back on with the speech, what we see here is even this candle, even though this candle's red, it shows that buyers are indeed in control. Why? Because that wick, the stock price came all the way down to this low, and buyers pushed it all the way back up, almost flipping this candle green, closing just a little bit below where it opened. Therefore, this is actually bullish sentiment, even though it was red. And inversely, with the inverted hammer candle, that's actually bearish sentiment. Because if you have a shot meter and you hold your shot meter all the way here, and then this is where you shoot, I mean, you're going to brick your shot. I mean, that's just how 2K works. So we understand placements of candles. You guys hear me talk about okay, for example, you guys hear me say, "Oh, this stock price needs to close above this resistance line." If it also can close above psychological levels, resistance lines, that's even better. For example, this was the previous high. It closed above the previous high, which showed complete strength. If it closed just below it, that would be not bearish sentiment, but that wouldn't be as the probability wouldn't be as higher of it continuing if it closed as opposed to it closing right here. So, for example, if it closed down here, I would be a little nervous for this next 5-minute candle to break. However, since it closed above it, I like it. For example, on this one, the 5-minute candle closed above the previous high, which I liked. If it doesn't do that, it's okay. However, I like for it to close above resistance lines, and I have to test on the new 5-minute candle. Okay, so here's some other examples. So, for example, on this one, it came up tested. While yes, it did break through the next 5-minute candle, I was a little nervous. Okay, what we see here is it actually tapped it in this 5-minute candle, got rejected, continued lower, closed down at this level, and then the next 5-minute candle continued higher. Yes, it still can break the high. However, I'm not as bullish as I once was, so I might take a little off the table. I might not be as fully sized in as I would if that 5-minute candle closed above the previous level. On this one, you can see here that I tried to have a 5-minute pullback, but it actually ended green. However, it was an inverted hammer candle. All of these candles were very top heavy. Okay, or sorry, bottom heavy. So, which the heaviness or the weight, if you think that these are all hammers, the bodies of these candles are all bottom heavy, which you don't like, which means that wicks, you don't like to see wicks. Okay, wicks aren't really a good thing because it shows that there's weakness in this level. Every time the stock price approached this previous level, it indeed got rejected once, twice, thrice, and then continued lower, never even giving us a pullback opportunity to trade. You don't like seeing candles with heavy wicks. It shows weakness. Okay, and this was a good 5-minute pullback. I'm going to move my whole camera so you guys can see it. I might just like put it in the center, put it back right. You can see here that it was a hammer candle showing strength. Okay, so this pullback was solid, retracing about 50% of its move. However, this candle ended up closing near high of day. So I was bullish on this one, and I traded it as this new 5-minute candle took the previous candle's high. Bullish engulfing candle. Okay, and this one closed well above the previous high. Therefore, it continued much higher. But you see here, with this inverted hammer candle, it's starting to show weakness, and it's going to continue lower more likely. Don't expect for this 5-minute candle, or whatever candle it is, to pull on back, have a hammer candle or an inverted hammer candle like this, and then have enough hope for this to just continue higher. While yes, that can happen, however, the probability, everything is probability based, is this should continue lower, okay? Because it shows there's weakness at this level and that it's completely overbought and it's time for a pullback. So you don't like to see top heavy wicks, okay? Now, what are time frames? Okay, these are the time frames I do utilize. I tried the ticker time frame of like the tick time frame called like a 10-second, a 15-second. I don't find those as beneficial. I like to use the one, oh, J Money's not even out yet. I like to use the 1 minute, the 5 minute, the 6 month, and the 1 year. Those are my favorites. We're going to go into why I use all of those in the future. We're going to talk about it a little bit today. However, I like to use these time frames. Now, time frames are all about, there's two numbers in a time frame. Okay. The first number is how long do you want your candles to be? So if you're trading the first time frame is how much data you want to see. So if you're trading the 5 day, 5 minute, you're looking at data. I like to use the 5 minute, the 1 minute for intraday. Okay, so there's historical charting and intraday charting. Intraday charting means that the candlesticks you're looking at are a smaller time period. You like to see what the data is given that day. Historical is what does it look like past beyond the day, the 1 year, the 6 month. So the first number is how much data you would like to see. So the 5 day, 5 minute would be 5 days of data, and every candle is a 5 minute candle. So if you're looking at the 6 month, 4 hour time frame, you're looking at 6 months of data, and every candle represents 4 hours of trading. Okay, everyone get the point of time frames. Now moving on to boom, advanced concepts. J Money, help me out here. So advanced concepts, there's a decent amount of advanced concepts when it comes to time frames. I'm gonna go. Okay, wow, we have two number ones. Number one, we're gonna go over find common time frames. The reason why I use these time frames is because I like to use time frames that are, I'm gonna say it again, time frames that are common. Reason being, why don't I use the 7 minute, 4 day time frame? Because no trader in the world is using that time frame. You want to find common time frames. The reason is if the setup presents itself given the time frame, you should see more buyers. For example, if the time frame, if you're trading on a 7 minute, 4 day time frame, and you see some sort of setup you want to trade, well, what's going to happen is you and about you only are only going to trade that. So there's not enough buying pressure to continue that stock higher. Your goal is to find setups that most people would like to buy and then ride that wave of momentum. Now, for example, if I'm trading the 1 minute or the 5 minute, a very common time frame, and a stock presents itself, odds are it'll continue much higher because a lot of traders use this. It's a standard time frame. Okay, and then number two, multi-time frame setups. This is another very advanced concept. If the setup presents itself in multiple time frames, your win percentage will be high. I wasn't supposed to talk about this for a few weeks, however, like today, because I think it's important. If the time frame looks good on the 1 minute, on the 5 minute, on the 1 year, on the 6 month, on all your time frames you use, what's going to happen is the more traders who are just looking at the 5 minute, who are just looking at the 1 minute, the 6 month, the year, they're going to be buying it too. So you want to rally the troops, rally everyone together. If it looks better on multiple time frames, your win percentage will be higher. TUP looked perfect on almost every single time frame I could pick. That's why I was super bullish on it a few days ago. I was also super bearish on it the same day because the setup just looked picture perfect again on all time frames. Another advanced concept, J Money, thanks for the help. What we see here is we like to identify our time frames, or we like to identify our setups on larger time frames. Okay, the reason being is it seems to be more consistent. Our strategies should be based around larger time frames because there's more of a summary of what happened. The smaller time frames can be choppier, can be a little emotional, while larger time frames rid some of that emotion. It presents the opportunities to us, and it showcases what the opportunity is given the summary of the move. Okay. For example, looking at the 1 minute time frame, you can see right here it did indeed fake out over VWAP, which I did trade and I did lose a little bit on. But then what I was really trading was the first 5 minute pullback here. So I identified the setup on the 5 minute pullback, but your entries and exits need to be on smaller, more minute time frames because it presents more data. For example, and then it finally broke the VWAP right here on the 1 minute candle. I bought it based off of the first 5 minute pullback, which I'm going to teach you guys later on in this program. However, if I just were to be trading the 5 minute candle, I might have not have seen this price action here because I really added when it took the high of the previous move, making higher highs. I also, when it came to exiting, I wouldn't have probably exited up here. I would have waited for this 5-minute candle to close, and I would have made much less money on it simply because it pulled on back so harshly. I saw the inverted candle on the 1-minute time frame, so I actually was on it and cutting it a little bit earlier than I would have on the 5-minute. So again, we want to identify our setups on the larger time frames. We want to identify our setups on the daily, on the 5-minute. We want to understand our entries and exits on the smaller setups, on the 1-minute, on the 6-month. And the reason why I threw in the 6-month in the 1 year is because those are historical time frames. So if you're trading something in a historical sense, so back to the time frames I use, again, this is the more summarized time frame. This is what I use for entries and exits. This is the more summarized time frame. This is what I also use for entries and exits. So you can see the smaller time frames I like to use for entries and exits, and identify the setups on the larger ones. Okay, that's how we do here, and that is practically it. When it comes to reading candlesticks, we all know how to read a candlestick now. We know the advanced concepts behind them. Obviously, you guys are going to learn some more advanced candle placements as you guys trade. We would be here all day if I showed you every single candle placement potential that I know of. And we're here to get you guys to be profitable traders in 4 weeks. So the point of this program is to take out all the extra stuff that you will learn later on in the road that's not super needed, that will eventually help you in the long run. But for now, we want to identify exactly what the most important stuff is. And I showed you the most important candlestick pattern, which would be the bullish engulfing or the bearish engulfing. You can see right here. So we see these bearish engulfing candles, we trade those. Also, the 5-minute candles closed over the resistance, so I was mega bullish on it. For example, on these, I was kind of bearish on them. For this one, I was a little in the middle because it did indeed get close to the previous high. However, it got rejected by it, and then so I finally added on the retest. Okay, and then a hammer candle, even though it was red, it does indicate strength. We went over time frames. We went over why we like to identify common time frames because more traders use them. We also like to identify multi-time frame setups to increase our win percentage. Now question. Will I trade something that is just setting up on one time frame? The answer is yes. However, we have to talk about our position sizing. Okay, which we'll have a whole nother lesson on. If the position sizing, if we're going into a super large position, we shouldn't be if it's only presenting a clear opportunity in one given time frame. If it presents an opportunity on multiple time frames, we should increase our size accordingly because more traders are going to buy it given the time frame they use. Then we talked about why I like to use these smaller time frames to enter and exit, and why I like to use the larger time frames to identify the setups. Okay, because the smaller time frames are more emotional, which is a negative, but on a positive sense, it gives us more data to be able to use it to trade and enter and exit. However, you shouldn't be identifying setups in the 1 minute. Obviously, micro pullbacks and things like that we'll talk about, but those are just advanced concepts. You guys need to clearly define the difference between an advanced concept and a strategy. Okay, so if I'm trading a 1 minute micro pullback, like right here, that's not a strategy. That's just an advanced concept. You need to figure out your competitive edge, like we talked about yesterday, figure out your strategy, and then use those advanced concepts to indeed increase your win percentage.